On this episode of China Uncensored, China's economy is seriously slowing down, and that's not good for America. Hi, welcome to China Uncensored. I'm your host, Chris Chappell. China's economy is slowing down more than ever before. Last year, China missed its official GDP growth target, and many experts say China's economic growth was probably even slower than that. This month, at the National People's Congress, the government announced it's replacing its GDP growth target with a target range, which I guess is easier to hit/fake. But most importantly, it's even lower than last year, meaning Chinese leaders are acknowledging that things are getting worse. But don't worry, they have a plan. For more, I'm joined by China Uncensored producer Matt Gnezda.
Thanks, Chris.
So first, how is the Chinese economy doing right now?
Well, Chris, it's definitely slowing down. But even the central government doesn't know exactly by how much, because city and provincial officials have been making up local GDP growth figures for years.
That seems like a problem.
Yeah. Plus, China is struggling with growing debt, lower commodities prices, real estate bubbles, a shaky stock market, and, some other things. But at the National People's Congress this month, a big focus was on manufacturing.
What did they say?
The finance ministers said Chinese wages are too high and workers have too many rights.
Wow, spoken like a true communist.
Well, the Chinese government has a valid argument to keep wages low.
What's that?
The cost of labor in China has been rising so much that a lot of companies are looking to get their stuff made elsewhere.
Long term, I'm looking at possibly thinking of production in another third world country.
So now Chinese leaders want to boost the economy in the short term by keeping wages down, so China's manufacturing can stay competitive.
It's like there's all that talk in the US about China taking American jobs, and now even poorer countries are taking Chinese jobs.
That's the gist of it.
So is China's plan going to work?
It might, but it's like a game of Jenga. Every move you make now could lead to a more serious problem down the line. Like, for one, Chinese leaders already recognize that in the long term, they really need to shift away from low-wage manufacturing and develop service and technology industries.
And for two?
For long-term growth, China needs to increase domestic consumption. And that can only happen if Chinese citizens have more money to spend, hence the need for higher wages. And frankly, Chinese domestic consumption is what America has been hoping for ever since President Clinton helped China get into the World Trade Organization.
This agreement is a good deal for America. Our products will gain better access to China's market in every sector, from agriculture to telecommunications to automobiles.
Well, American companies are selling products in China now.
True, but not nearly as much as they'd hoped. Instead of America dominating the Chinese market, China has been dominating the U.S. market, which CNN explains here.
We were about equal in 1985, and we have not risen nearly as much in terms of the products that we send to China.
Okay, so the plan hasn't worked so far, but eventually Chinese people will have the spending money to buy U.S. products, right?
Well, not if Chinese leaders keep workers' wages low. And by the time wages really do go up enough, it may be too late for American companies, because China has spent the last couple decades creating its own versions of U.S. products, so it doesn't have to buy so much from America. Like how the Chinese government banned Microsoft Windows 8 and replaced it with a homegrown knockoff, Neo Kylin. Or how the Chinese government banned its agencies from buying iPhones and instead encouraged them to buy homegrown phones like the obvious knockoff Xiaomi. Or how the Chinese military copied the design of the Hummer and created their own Eastern Wind vehicle.
It's like there's a pattern here.
There might be. And the key is that with China's economic slowdown, the market for U.S. products there may not get as big as U.S. companies hope. So the promise of the U.S. economy benefiting from helping China grow is looking more and more like this. I just don't understand why we're not getting any closer.
Thanks, Matt. And for an in-depth look at how China's manufacturing slowdown has affected Chinese workers, watch this video from our friends at the Financial Times.
Some Chinese firms are resorting to the unthinkable, importing workers.
So what do you think about China's economic slowdown? Leave your comments below. Once again, I'm Chris Chappell. See you next time.
The point is, men in China also care about International Women's Day.
Wait, what was that last image? One country has been aggressively pursuing its own selfish interests in the region, angering its neighbors and possibly even incurring the wrath of Neptune. And that country is Japan. What? You expected me to say China?